Hello everyone, my name is David Way and I'm the portfolio manager for the Fidelity Long-Short Alternative Fund. And I'm here to talk to you about the current environment around tariffs and other issues going on in the economy and the market. The one thing that we can all count on as investors is uncertainty, and today's uncertainty relates to trade. And I think the one thing that we always try to focus on at Fidelity is finding opportunity. And situations like this, where we see significant dislocations, often make people like me very excited about the opportunity to find companies to invest in. Uniquely, I manage a long-short fund. So on the long side, I'm really looking for companies that have been unfairly painted with a negative outlook related to all of the issues currently happening. And one of the things that excites me is when I can find good companies that I'd like to own and are now available at a significantly better price. One thing that's really unique about being a long-short manager is that I can also look for companies that might be vulnerable to the likely policy outcomes. Perhaps not the headlines that we're seeing today about what happens with tariffs, but the ultimate landing spot that we see. And so on the short side, what I'm looking for are companies that are vulnerable to changes in trade patterns, differing employment outlooks, as well as broader economic challenges that may emerge. And for me, it's a really nice place to be because I can really try to find opportunity, and as the market continues to show some volatility, I actually have opportunities to generate returns for clients from the short portfolio while continuing to build the long portfolio of stocks that I'm excited about in the medium term, notwithstanding some of the scary headlines we're seeing today. From a team perspective, we're doing what we always do. Fidelity has a large army of analysts who are continuing to meet with companies. I'm sure we've met with hundreds in just the last month alone. I've met with 50 companies in the last month who are directly exposed to the tariff risks and moving beyond the headlines to find out what exactly is going on within companies. And I can tell you that what you're seeing in the media versus what's happening in companies is quite different. And so that's very exciting as an investor to try to find opportunities where perhaps the market is missing where we'll land. And as far as my own views go on where we will land, I think that it's very important to understand from a U.S. political perspective that there's a couple of pretty important groups that would be unhappy with the tariffs as currently announced. The auto industry is significantly in the press, and I think it's really interesting that in 2025, we're actually celebrating the 60th anniversary of the U.S. Canada Auto Pact, which is actually the original agreement that both led to the integration of the North American auto industry, but also provided the predecessor agreements to the original free trade agreement signed in the 1980s. From my perspective, I do think that we will land in a place where there will be some level of tariffs between certain countries. And I think what the market's seeing today is U.S., Canada, Mexico, as well as China, and I actually don't necessarily believe that this will be the place where we land. There may be some level of tariffs, but where I'm really trying to plan around is where we end up 6 to 12 months from now. And I think the tariff situation could actually be quite different and not as negative as people think for Canada today.